One case where charity planning can really help out is if your client has a abnormally large income year, some huge bonus at work or a sale of a business or some other asset. We can bring charity into a single year through the use of, say, a donor advised fund to offset that large income year. So here's an example I put in the system. This client, I gave them, here it is, another income. I just gave them a $1 million lump, huge income event. Now this is a client who is accustomed to giving, I'm gonna say, what did I make it? $20,000 a year to charity, okay? Well, let's say that's generally their pattern over many years. Let's use a donor advised fund to bring a lot of those years of charity into a single year, and we can offset that huge income event. Now, I will say this, I'm not going to go into it in a ton of detail, but there are limitations as to how much income you can offset with charity deductions. And the system will calculate this for you. You may remember from the CFP curriculum, if you went through that there are different limits based on the type of donations you make and the type of organizations you give to. So just make sure that within the charity worksheet, you're putting things in the right boxes. The system will then make sure that we handle those AGI caps. It's something to be careful of. I had one case with a client who sold his business, struggled to sell the building that his business was located in. He just could not sell it. And so he ended up donating that building. The problem was the building was worth so much, and because he had retired, his income was low enough that it took several years of carry forwards for us to get full credit for that donated building. And honestly, it would have been better for him to try to donate it in the year that he had that higher income, so it could have fit within that AGI limitation. We have a donor advised fund explainer, which you could use for this exact case where there's a high income year. I can pop this open here. The donor advised fund explainer kind of goes through, here's what it actually is. This is meant to be client facing. Here's what it is. Here's how it works. And then we can actually show the client, let me just show you the total tax with and without a huge donor advised fund amount. So let's go back actually. Let's go back and let's actually put a whole bunch. Let's say we're going to take 5 years. So instead of $20,000, we're going to do $100,000 in here. So I took 5 years worth of charity and I put it all in 1 year. This donor advised fund this donor advised fund explainer can show us, look how much difference in total taxes that charity grouping did for us. In this case, it's a total tax of $336,000 versus $312,000. Pretty big savings just from our moving deductions into a single year. And then this report kind of helps the client understand, like, what are the mechanics of what a donor advised fund is and how we use it. Let's say your client gives to charity every year $10,000 to $15,000, $20,000, enough that it's pretty significant, but not enough to get them over the hurdle rate of the standard deduction. And so if we don't do something as planners, we kind of like waste that amount of charity that your client does every year. So one way to do that is we use a donor advised fund to group multiple years of charity into 1 year. So here's an example of a client who, what's their annual charity? I'm going to put in, where the heck is it?